All right, welcome back to an earlier weekly market recap as we have Thanksgiving this week. This year made one thing brutally clear. Crypto has a very specific problem, and the recent crash exposed it for everyone to see. So while most risk assets have been rising, crypto has been moving in the opposite direction. So what's really happening? Um, You'll hear a lot on X, Twitter about liquidity, and some of it is true. But here's the real story: liquidity isn't gone; it's simply not flowing into crypto, and that changes everything for this asset class. So the big question is, what needs to happen for crypto to get back on a bullish path, and what are we missing, and what comes next? As always, let's break that down with the charts. So normally we start with stocks, as always. So you see Nasdaq, it was just a correction, hit a support level here, and now we are up again. Also, ARK, blockchain fintech innovation ETF, hit a nice support level here and is going up again. So it really seemed that this was just a high beta correction, especially if you look at classic indexes such as the Dow Jones Transportation Average, which is forming a massive rounding bottom here and is up over the week, which is an encouraging sign and speaks of rotation within a healthy bull market. Also, signs of rotation within a healthy bull market, and that's a lifeblood of a bull market. You see small caps are going up strongly again. So that will be interesting if we can push up further. But this kind of momentum and these stocks is really a sign that the bull market is not ending. It's just rotating from the higher beta assets to the more value-driven ones, and small caps are an indicator for that. Now, what really helped is last week I told you that we just had around 40% rate cut probability. That changed a lot. That also helped the market a lot. So it's really dependent at the moment on what the Fed is likely doing. So swaps are pricing in nearly 90% probability of Fed cut again. And of course, that helps risk markets. Now, people are also worried about inflation. And yes, inflation is higher than the 2% target of the Fed. But I would say, forget this target. This target is over. And if you think of it longer term, over the last 5 years, we had 4.6% per year over year price increases, and nobody cares. And if you're honest, if you're in a world of fiscal dominance, if you are over indebted and your path is to issue even more debt, of course your inflation target is higher. Do they say that? No. But I think the implicit target of the Fed is already at 3% plus without communicating it, because in real terms, that's how you deflate your debt. So don't worry so much about inflation. The dollar, also important. Dollar is going down again. And I said that is a necessary precondition for risk markets to rise. So that's good. Of course, goes hand in hand with the increase in rate cut probability. You see gold still consolidating, forming this triangle here in an uptrend. That's a continuation pattern, which is also looking good. But here's the thing in crypto. Here is our crypto sectors and broken down as a percentage down from all-time high. And you see that surprisingly centralized exchanges are doing relatively well, even better than Bitcoin, but it's all down heavily. And if you look at our top 100 equal weight, which is proxy for the altcoin market, it's down 70%. So you can say the average altcoin is down 70%. With media entertainment, which is gaming, metaverse, wiped out, you can say almost completely. So what's happening? Why is that? Now, Bitcoin, and I come to the rationale why this is happening. Bitcoin also corrected strongly to the downside, almost crashing. And oh, it was a crash, to be honest. But we see here this counter trend rally, which is also slowing down again. So what is really important for the whole crypto market, if we look at Bitcoin as a proxy for the crypto market, that we are going back to the 108 and above and in a relatively short time. I think that this chart is broken and that we need some time for consolidation. Yeah, so I think there is no quick fix, and we just have to accept that instead of having this constant hopium on X. It's not a normal correction, guys. It's really some charts are damaged here and it needs time to repair. Um, Also, if you think Bitcoin compared against Nasdaq, you see this huge down momentum. Yeah, so we had that in 21. Maybe it's similar, but as you see, we need some momentum, quick momentum to the upside. We don't see that yet if we compare Bitcoin against Nasdaq, and especially, for example, if you compare it against Google. Now, Google is a very strong outperformer, but as you can see, money has flown into AI. That's my opinion. It's just a matter of fact. We are talking a lot about liquidity and TGA and maybe tariff rebates and all that stuff, which will help, right? That's correct. But if we would have, if it really was a liquidity problem, AI stocks, risk markets, commodities wouldn't be so strong this year. It's just a problem that the money didn't flow into crypto, and we have to be honest about that. Also, again, MicroStrategy against Bitcoin, no, no consolidation, no sign of a bottoming. It's just going down. And as I alluded to last week, MicroStrategy needs $700 million per year for dividends and operational costs. So there will be a time where he has to sell Bitcoin if Bitcoin is not recovering here. So that's the depressing picture here. Now to the hopium. Again, our market vector crypto heat index is in extreme oversold levels. So as I also mentioned last week, if you think about selling, it's maybe not the right time now. And it's rather the opposite. And so these extreme levels are normally the foundation for strong counter trend rallies. Question is, do we stop in the yellow zone or are we going back into the red zone? But yes, we are strongly oversold and a rally should happen now. If we look at the VanEck Digital Transformation ETF, which is the crypto stocks, yeah, Circle, Coinbase, Galaxy, the Bitcoin miners, the digital asset treasury companies, it holds here the support level and turned here, which is nice. So that's also a good sign that we see risk appetite here again. That's definitely needed. So maybe also a reason why crypto tokens suffered because people are buying the crypto stocks instead, right? It's also one factor. But there also, besides the crypto heat index, other encouraging factor is, and I'm showing this chart now for the last several weeks, Bitcoin dominance isn't going up again, which it should in a bear market. Yeah, so altcoins are doing relatively well, are holding up well against Bitcoin. And so that's also a very interesting signal to monitor. So that brings hope when it comes to this counter trend rally, that altcoins could outperform further, meaning Bitcoin dominance should fall even further if we see that recovery, right? So that's very important. To summarize the overall thing, while the charts they don't look good, I think the important message is here that there is fatigue in crypto. Everyone is looking at AI stocks. So we are at such a depressed level that, let's say we get the Clarity Act and we have some other triggers, positive triggers, there can be a case for a strong rally in crypto again. But we need to see it in the following weeks. Otherwise, I expect a longer downside consolidation, which is, I think, if you're not invested, a welcoming opportunity to think about your asset allocation for the next year. But at the moment, we just have to be honest and say, okay, liquidity has flown into AI, into tech, into commodities, into precious metals, and it seems it's now rotating also into value stocks now. So never, no asset class can be in such depressed levels forever. So that's the good message. But we need to watch Bitcoin dominance, the Bitcoin chart itself, and where the flows are heading. So I wish you a happy Thanksgiving and see you next week. Thank you very much.